Good day everyone. My name is Juden Estempeño, your first reporter for today, and for this video, I'm going to discuss the efficient capital markets. So at the end of this topic, the group will learn about the products that holistically make up the capital markets, determine the factors contributed to an efficient market, and of course, create and apply efficient market hypothesis and define behavioral finance and how it relate to efficient market hypothesis or EMH. So, moving on, description of efficient capital markets. So, by the way, what is efficient capital markets? So, efficient capital markets are commonly thought of as markets in which security prices fully reflects all relevant information that is available about that fundamental value of the securities. So, an efficient capital market is one in which stock price fully reflect available information. So, the efficient market hypothesis has implication for investor and firms, since information is reflected in security prices quickly. Knowing information when it's released does an investor little good. So in this statement, it shows that inefficient market hypothesis or EMH is that it has implication in an investor and also some firm. So, since yung information it reflect in security prices, knowing that yung information it released by an investor in a good way. So, firms should expect to receive the fair value for securities that they sell. Firms cannot profit from falling investor in an efficient market. So firms should expect to receive, of course, the fair value for the securities na kanilang ibaligya. So firms cannot profit from falling investor in an efficient market. It stated that in one company, they already expected that they can receive the fair value, of course, in securities, and of course, sang kanilang ibaligya or ibaligya na something kanilang product. So, that's all.
So, good afternoon, ma'am. My name is Charlene E. Espirituso. My topic for this afternoon is all about investment company. An investment company is an organization, trust, or entity that collects capital from various investors to reinvest it in financial securities such as quality, debt, and a wide range of money market instruments. So, the main business of an investment company is to hold and manage securities for invest purposes, but they typically offer investor a variety of fund and invest services, which include portfolio management, record keeping, coastal, legal, accounting, and tax management services. So, there are three main types of investment company. First, open-ended investment company. Second, closed-ended investment company. Third, and unit investment trust. First, open-ended investment company. An investment company that stand ready to buy and sell shares at any time. Second, closed-ended investment company. An investment company with a fixed number of shares that are bought and sold only in the open stock market. Third, unit investment trust. Money pulled from money investor is invested in portfolio fixed for life of fund. So, example of investment company. Etelmark Philippines Insurance Agency. Lone Star Landing Group Corporation. Carista Financial Eight Etelmark Philippines Insurance Agency, Lone Star Landing Group Corporation, Carista Financial Plan, OSG Global Consulting, DS Financial Corporation. These are the example of investment company.
Capital market products. Equity securities. Equity securities, it is the representation of ownership interest that controlled by the shareholders and also a company net asset. It is also plays a fundamental role in investment analysis and portfolio management because it represents the significant portion of many individual and institutional investment portfolios. Commodities. Commodity, it is an economic good, usually a resource that has full of substantial borrowing, meaning that the market treats all instances of the product as comparable or nearly so regardless of who produced them. So ngani, kumbaga, ang commodity ay nagsisilbi siyang tradisyon na sa isang aspeto ng negosyo. But the trading also has grown in its increasingly and has its standardized. So, debt securities. So, unlike equity securities, compel the borrower to repay borrowed principal. It also depends on the interest that they gave based on the credit worthiness ng isang borrower. Foreign exchange. Foreign currency or forex is the conversion of one country's currency into another. The value of a country currency is determined by supply and demand in a free economy. So in other words, the value of other currency can be tied to the currency of another country, such as the US dollar, or to a basket of currencies. So time to time na nag-change yung currency and gadipindi sang demand how supply ng economy ng isa ka country. Derivatives. So, a derivative is a contract between two or more parties whose value is based on an agreed upon underlying financial assets or like a security or a set of assets like an index. So, yung derivative kay isa ka contract naga-base ang isa ka agreement daunan or it's either financial asset or set of assets. Also, it's include the bonds, commodities, currencies, interest rates, market, and the stocks.
By the way, I'm Pritzel Imingin. I'm the next reporter entitled Efficient Capital Market. In my report, it entails about the 3 factors contribute to an efficient market. Number 1, the number of market participants. 2, information availability. 3, limits to trading. So number 1, the number of market participants. Market participants are those buyers and sellers transact business in the principal market for an asset or liability. When we say market participants, ito yung mga importanteng tao involved in marketing production. Not only of a certain business or enterprises, dito rin pumapasok yung mga buyers,
sellers, investors, or traders that deals their product in the market. Number 2, information availability. So, it is the ability to make information and related physical and logical resources accessible as needed when they are needed, where they are needed. We all know that information availability, it is very essential in a business or organization. Most especially when a certain product is being recommended in market. Alam naman nating lahat that having a clear information about the products can be valuable and provide awareness to all consumer or customers. So number 3, limits to trading. So a daily trading limit is a maximum price range limit that an exchange trading security is allowed to vary in one trading season. Limit up is the maximum amount a price is permitted to increase during one trading day. Limit down is the maximum permitted price decline occurring over one trading day. So, limit to trading, it is make a certain product affordable.
So, good morning everyone. I am Ella Marie Enriquez. The fifth reporter for the topic is all about the efficient capital market. So, this video, I'm going to discuss about the efficient market hypothesis. So, when we say hypothesis, it is the theory or the opinion. So, Efficient market efficient capital market hypothesis posits that the market cannot be beaten because it incorporates all important information into current share prices. So stock trade at the fairest value. So through the efficient market hypothesis, theories the market is generally efficient. The theory is offered in the different version or the different categories. So, these three categories, which is the weak form, the semi-strong, and a strong form. So, the efficient market hypothesis or EMH consists of three progressively strong forms. So, I've said that these are the three: the weak form, semi-strong form, and the strong form. So, when we say weak form, so the form says that past prices, volume, and other market statistics provide no information that cannot use or cannot be used to predict future prices. So, the question to be considered in weak form is how will the past returns predict future returns? So, ibig sabihin ang weak form ay hindi siya nagbibigay ng impormasyon na magagamit upang mahulaan ang future prices o ang darating na presyo. Ang weak form covers the least amount. So, that is called the weak form. Kaya nga nasa ibaba siya. Kaya tinatawag siyang weak kasi hindi siya nagbibigay ng information. So, that is one of the hypothesis of the efficient market. So, the second is the semi-strong. This semi-strong is prices fully reflect all public available information and expectation about the future. So, si semi-strong, tinatawag siyang public information. It is because it is accessible to everyone or in the public. So, the question to be asked in the semi-strong is how quickly do security prices reflect public information announcement. So, gaano kabilis ipinakita ang presyo sa publiko, or ito ang tinatawag na semi-strong. So, the third is the strong form. Tinatawag siyang strong form, it is because it is a private information. Strong form is prices fully reflect all information whether publicly available or not. So itong si strong form is all information, mapapublic man or hindi. So the question to be asked is, though any investors have private information that is not fully reflected in the market price. So that is what we called a strong form. As you observe in this diagram, the circle represents the amount of information that each form of the EMH or the efficient market hypothesis includes. So, as you observe, the center of the diagram, it is called the weak form. So, weak form, it is all historical prices and return. So, ito ay bumabase sa prices. So, the second circle is the semi-strong. So, semi-strong is all public information. So, I will note that the weak form covers the least amount of information and the strong form covers all information. Also note that each successive form includes the previous one. What is the importance of efficient market hypothesis? So, bakit importante ang efficient market hypothesis? So, efficient market hypothesis holds that when new information comes in the market, it is immediately reflected in stock prices. Neither technical analysis, which is called the study of past stock prices in an attempt to predict future prices, which is tackled, I have said that it is the weak form. So, nor fundamental analysis or the study of financial information can help an investor. So, importante na ang importante ang efficient market hypothesis kasi kapag may impormasyon na lumalabas ay agad-agad itong nagre-reflect sa stock prices. The importance of efficient market hypothesis according to my research is this focuses on the stock prices of the market, kung paano naging mahusay ang isang market pagdating sa prices. Kaya nga mayroon silang 3 stages para malaman nila kung paano ito naging mahusay. So, it is also important in political implications by adhering to liberal economic thought. The efficient market hypothesis suggests that there need not be any government intervention within the market because stock prices are always being treated at a fair market value. So, that is my report.
Behavioral finances and efficient market hypothesis have different kinds of perceptions of financial literature. While the efficient market hypothesis supports that people are rational investors who are important part of financial market. In efficient market hypothesis, for example, if you decide to join yung investment sa stocks, number one question mo palagi is, ano ba yung stocks na bibilhin mo, hanggang kailan mo siya i-hold, and ano bang stocks na dapat mong bilhin, and ano bang stocks din yung sobrang mahal at sobrang mura. And kasi yung objectives natin pag bumibili tayo ng stocks market is bibili tayo ng mura, hoping na tataas pa yung presyo niya. And by the time na tumaas yung presyo niya, that's the time na ibebenta natin siya para magka-pera tayo, para kumita tayo. In behavioral finance, which is alternative model accepts people as norm and irrational. When we talk about behavioral finances, hindi natin maiwasang pag-usapan yung mga biases, mga cognitive biases. Kumbaga, ano ba yung nakakaapekto sa decision making natin as an investor and as a person as regards as our finances. Kaya siya naging cognitive biases kasi irrational and illogical yung decision. Kumbaga, yun yung parang dapat default thinking mo na probably hindi na makakatulong sa finances mo. For example, may sinalihan kang investment, for example, Bitcoin. When you do not understand the cryptocurrency, so wag kang sumali dyan. Hindi porket sumali yung kaibigan mo is sasali ka na rin kasi iisipin mo parang napag-iwanan ka. Hindi tayo basta-basta papasok sa isang investment na hindi natin alam. Dahil darating din yung panahon na tayo parang tayo din yung malulugi kasi pumasok tayo nang wala tayong alam. So, we have to, sabi pa nga nila, do your own research. Walang masama na kailangan mo munang alamin yung mga bagay-bagay na dapat mong papasukin. Yan, ganun siya. However, behavioral finance claim that investor tends to have some psychological emotional biases which lead to irrational, yun nga yung sinabi ko kanina, but both new and old concepts try to find solution for economic and financial problem. Magkaiba man silang dalawa, pero yung concepts na gusto nilang masolusyonan is para maiwasan ang financial problems. These two types of models play para maintindihan natin and para maiwasan natin ang pag-i-invest ng basta-basta nang hindi natin napapag-aralan.